What is going on, traders? Another trade recap for you. We turned $45 into $675. That's right, you heard that correctly. That's 1400% return on our SPX puts, and I'm going to show you exactly how I did this. I love doing these trade reviews because you get value out of them, and it also reinforces some of the concepts in my mind even after all of these years of trading. And trust me, I don't hold back. I give you every single detail of what I was looking for, how I entered the actual trade itself, if it was an option trade, why I took that strike price and expiration, and I go through my entire process from A to Z. So you definitely want to stick around to the end and give it a thumbs up if you want me to keep doing more of these. And I will give you a bonus trade towards the end because our first trade today was actually 41%, which sounds paltry compared to the 1400% on SPX, but it was a 41% put trade on Tesla. So I'm going to get into both of those, but first I will give you the juicy one. And I think it is much more important how that trade is managed before we dive into the Tesla trade, which was, I would say, a little more vanilla. And I'll tell you why in a second. But if you get anything out of this, leave it a thumbs up and let's get right into it. Actually, before I start, you might have heard about this, but I just want to give a quick notice that we are taking spots on the wait list for my personal mentorship program. I'm going to be teaching 20 students or less throughout 8 weeks in the summer, going through every detail of technical analysis, trading, options, futures, etc., going from A to Z, teaching you everything I know from beginning to the end. This will be a very intensive, immersive 8 weeks. And again, the class size is going to be 20 people or less, and spots are filling up fast on the wait list. So definitely secure your spot on the wait list. You will have to answer a questionnaire and apply. And if you are approved, you will know. But it is 8 weeks in the summer. We're going to be starting it very soon. Right now, the tentative start date is July 11th. So make sure you put your name on the wait list. Let's dive into these trade recaps. All right. So as you can see here, the trade that I have up is an SPX put. And this was actually really late in the day. And what makes this interesting is the price action. Jerome Powell was speaking today as of the time of this recording on June 21st. And since he started speaking, the market was really trading sideways. And if you were glued to the market or were watching market sentiment on like Twitter or whatever, people were complaining, and you might have been complaining about how sideways the market was. However, we did see this pop late in the day, and this is where things started to get interesting for me. Obviously, I didn't chase this pop. If you guys are familiar with the trading style with this channel, you know that we don't chase trades. We wait for market confirmation, and we actually took a put. It wasn't a call. So we were actually bearish on the trade. So I was actually tracking ES, which is the S&P 500 futures. I wasn't tracking SPX. Now, a lot of times, especially towards the end of the day, if I think a big move will come, I do like to take SPX trades because, as you can see, we made $675 per contract from a $45 commitment. And, you know, although futures are more fair pricing, the price that you see is what you get. You're not subject to things like Delta, Vega, Theta, etc., right? But when I'm expecting a big move, I do sometimes like to trade SPX. So when I was looking at the S&P 500 futures, if you pull up the regular trading hours as opposed to the full trading hours, you could see that we actually gapped down at the open. We have this big gap here. And as I said, after Jerome Powell started talking at 10 a.m., we started trading sideways. And then, interestingly enough, late in the day at about 2 p.m. New York time, we started climbing up to fill this gap. And then I saw this right here, and this to me looked like a liquidity grab. If you're familiar with this channel, the masterminds, you're in the academy, you know exactly what this is. This is a liquidity wick. And so it filled this gap here, and I spotted this wick. So I immediately said, okay, well, if there's going to be a big move happening, if that is just a liquidity grab and we will likely see now a move down, I want to be in SPX here. And some people in the academy, by the way, did trade ES. They traded S&P futures, you know, made a good $500 per contract, but in this case, I chose SPX. Now, did I enter at that gap fill? No, I didn't. I waited for confirmation. So as you can see, market structure was broken to the downside. So liquidity will be your first clue. Market structure is your second clue. These are the makings of an A+ trade, according to the way I trade and the way I teach. So market structure broke to the downside. This immediately tells you that the market is okay with taking liquidity and moving back down. So what do we wait for? We wait for a retracement. We got that retracement into this imbalance, what we call a fair value gap. I had the Fibonacci pulled out as well, and this was near the 0.618 fib, in between the 0.5 and 0.618. Very important level if you have confluence. And if you're an EMA trader, guess what? This came right into that 21 EMA, the green line. If you're an EMA trader, I'm not, but sometimes I pull up the EMA for one more point of confluence, right? So we had the EMA slam there, where the fair value gap was, where the Fibonacci was. I don't need more than that confluence in order to take a trade, especially one that costs $45. So we ended up taking that trade, as you can see here. Let me just pull up the trade for you. I said, looking at 4370 SPX put, 0 DTE means 0 days to expiration. So this expires today, and it expired actually within, less than an hour of taking that trade, which is why it was so cheap. And which is why when it makes a big move, that contract tends to inflate drastically, right? Size for a full loss. So take risk into account. So when we trade SPX 0 DTE, very different from trading equity options that expire at the end of the week, very different from trading futures, which have face value pricing. So you have to be ready to size for a full loss. If your budget is $1,000 per trade, then that means that you can only take about 20 contracts at $45. If your budget is $500, then it's half that, 10 contracts, right? If it's less, obviously tune it as you like, but this is why this is really good for a small account, especially if you know how to trade, because these aren't haphazard trades, right? Like a lot of people just YOLO on SPX. They might hit a couple times out of 10 and think that they're a good trader. But in this case, we are actually using very precise technical analysis and using SPX as a leveraging tool. And again, if you have a small account, this is perfect, obviously, once you learn the proper TA. So we entered that. I was okay losing most of it, because if the trade had gone awry, even though we had 3 points of confluence, it would be very weird for the trade not to work out. But let's just say that it didn't work out, then that SPX contract is going to lose value very quickly as we near the end of the day, because all out of the money options are going to expire what? Worthless, $0. So in that case, we entered the put, and then obviously along the way, you could see what had happened here if we do the replay, although you already saw it, but this is how it ended up playing out. And so obviously, if you have multiple contracts like I did, this did end up tanking really quickly. But say, you get around to VWAP and you're not sure whether the price is going to stall there, or you get around this area of consolidation, you're not sure whether price is going to stall there. Of course, it is so prudent to take profits along the way. So we took profits at 230%, 644%, and then ultimately at 1400%. Now, why did I take profit there? Well, simple, because I was targeting this area down here, which it looked for all intents and purposes like we were going to once we had that liquidity grab, that imbalance, etc. This is the area that I was targeting, and the minute that we touched that area is when I actually exited out of the trade. So that was the SPX trade. Again, SPX, very powerful tool if your TA is on point and you are using SPX for leverage. If you don't want to trade SPX, you want to trade SPY, or you just want to stick to futures, obviously do whatever is good for you. The risk management changes slightly, but the principles of the trade remain the same. So the other alert that we had was Tesla. I promised you I would give you 2 trades. So thumbs up for 2 trades. By the way, if you want access to all of this stuff, either sign up for the mentorship, you will get access to the academy as well, or just sign up to the academy if you're not interested in the mentorship. But here it was on Tesla. Very similar. No, actually, it wasn't similar at all, but obviously the number of confluences is what I'm talking about was similar. So this was way earlier in the day. It was just a matter of making lower lows and lower highs. I did get a question actually on the last mastermind that we did for free last Sunday. Someone had asked me on a trending day, how do you know when to enter? And the principles don't change, because on a trending day, you still have broken market structure. Every time that this makes a lower low and a lower high, you are technically breaking market structure. It doesn't mean that you are shifting market structure, meaning going from bearish to bullish or vice versa, but you have a market structure break and a retracement into an area of confluence. In this case, we had the fair value gap here. Actually, let me pull up Tesla and show you exactly what we had, because we had a number of confluences. So if I just pull up Tesla, and that was off of the 5-minute chart, and it will come naturally to you, in terms of which chart to use when. As I always say, all you're trying to do is tell a story, and it will come naturally to you. So in this case, here it was. This was the actual trade here. A few points of confluence. Remember, we always look for at least 2. I would really like 3 or 4. But if I have 3 or 4, there's no way that I'm not taking the trade. And there's no way that I'm not using proper sizing for the trade, meaning I think a lot of times people go undersize on their trades, and their winning trades, they don't end up with a good amount of capital because they're so scared. So in this case, case, I always use 1 to 2% of my portfolio for my trades. And in this case, if I have 3 or 4 areas of confluence, then I would likely err on the side of 2%. Obviously, 2% is 100% greater than 1%, right? So I always err on the side of 2% on those trades, meaning I go on the heavier side. So in this case, we had lower highs, lower lows right after market open, and we were right up here, 21 EMA. Again, if you're a fan of the EMAs, you will like that. So we had the 21 EMA, Confluence 1, Confluence 2, this fair value gap right here, Confluence 2, Confluence 3, golden pocket, Fibonacci's will never fail you or rarely fail you. And Confluence number 4, this SR flip. This right here was support. As you can see, a couple of candles here finding support. Once we broke below, now it is resistance. 4 areas of confluence. You're going to have to pry this mouse out of my hand before I don't take this trade. So ended up taking that trade. We took a put. It was the 260 put. Ended up writing that down for 41%. Why the 260 put? Well, the 260 put was because we actually had hit 260 already on Tesla, and we took that trade from 265. So it is Wednesday. Remember I said that the earlier in the week it is, the more out of the money you can go. But in this case, it wasn't outlandish because we already hit 260, and it was likely that we would hit 260 again if Tesla had retraced, and that is what happened. So it is Wednesday. It was early in the day. We were not worried about theta, and 260 for 41%. And for those of you wondering, in terms of, our win rate, we are 21 of the last 24 trades. So extremely high win rate. And when we do lose, you know that we are always exercising proper risk management. So even our losses, we're taking very minimal losses because all of our trades are at least 2 to 1 R. And in some cases, our trades are 1,400%. So, you're talking about a 15 to 1 R in that case. So hopefully you guys got something out of this. I really, really love doing these trade recaps, even if they get lesser views than the market updates and whatnot, but it doesn't matter to me. If you guys get value out of it, that's all that matters. Again, if you want to join the Academy, click that second link in the description. If you want to join this mentorship or apply to join this mentorship, because we're taking 20 students or less, we'll run 8 weeks in the summer. In my view, will be the best summer of your life as it relates to learning something. Maybe not, as fun as going on vacation or something, but invest in yourself if you are so inclined. And if you are approved, I will see you there. Leave it in the comment section below. Let me know if you learned something, or if you have any questions. I try to answer all questions as well. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.